Alrighty, what's up folks? Quick recap here for December 7th session, and for the bears out here, it was quite the doozy. So the bulls taking a little bit of control here today. So S&P 500 up about 2%, the QQQ up about 3%. So the Q gives you a nice 3-piece here today. Small caps up about 2.5%, and then the Dow here is up about 1.5%. So good stuff here from the bulls today. And in terms of structure, energy back above the daily 21 EMA. Financials back above the 21. Industrials back above the 21. Transports back above the 21. I don't know if I said energy already, but energy back above the 21. Real estate, all-time highs. Utilities well above the 21 EMA. So in other words here, last couple of days, we've made some pretty good progress as far as getting that shift of momentum and rebuilding that daily structure that the market needs to get a push back towards the highs. So in terms of the S&P and the QQQ, it's one thing to pull back into your weekly 21 EMA here, but then what you need is that you got to rebuild your daily chart. You rebuild your daily chart, then you can get your big push off the weekly 21. So if you look back here, we pull back to the weekly mean. We don't get trending again until the daily chart kind of rebuilds itself. So you're back above the 21 EMA, you get this shift of momentum, you get your stacked EMAs, then it's typically off to the races. So, today is a good start, and I think the bears kind of take control again if we end up back under the 21 EMA. But for today, the bears are definitely squealing just a little bit, so good progress here. And if we look at momentum, from a 4-hour chart down to a 5-minute chart for the S&P, green 10x bars means bullish momentum. For the QQQ, a monthly chart down to the 5-minute, you have green 10x bars, so whole bunch of momentum there, and even the small caps trying to improve a little bit here. It's still a little bit dicey on the small caps, but what I'm looking for over the next couple of days is for the indexes to just simply hold above the 21 EMA. And then I think we could be back to business towards brand new all-time highs. So pretty much here, guys, when I put these videos together, I'm not trying to come at you, I'm bullish and I'm right and here's how it's going to happen. It's just more so kind of focusing on structure and experience, trying to bring you what I think is the best idea. So typically, if you're in the crowd of folks buying puts on Friday, buying puts, last week, typically in an uptrend, shorting at the weekly 21 EMA isn't going to serve you too well. I think the easier short is we break the weekly 21, get rejected after the next bounce, then you short the puppy. But in terms of what we got going on here on our end, so in my mastery, Netflix is our only position right now that I'm not liking as far as the structure goes. So we took our position back here. We bought the spread back today for just about break even. I think we sold it for $1.50. We bought it back for $1.70. So I did get the mastery out of Netflix. Pretty much no bloodshed. And I think tomorrow if we get a decent bounce, probably can get the mastery out of Netflix break even as well. Or the options room rather. But the whole point being here, I'm not trying to, hold on to Netflix. I'm not trying to add to Netflix. It was a good looking chart back here. It's not a good looking chart anymore. So if we can walk away break even, that means we get to keep all the profits from the trades at work, like our trade that we closed last week in Apple. So got one group out of Netflix break even, trying to do that there for the options room. And then in terms of the QQQ, so for those of you in my mastery or those of you who did the scanner live trading, we sold the January expiration 380 short put spread. On the dip there last week, I think we're sitting on like 30% of max profit. So we should be in good shape to take home 75, 80+% if we continue to grind higher and break into a new all-time high over the next couple of weeks here. Let's see, for Amazon. So Amazon, we still have our January expiration put credit spreads here. If we can finish the week off trading above the 21 on the daily chart, to me it's done a pretty good job here regaining that bullish structure. And the weekly chart still looks awesome. So I would look to add to that towards the end of the week there, potentially. And we do have a couple of spreads on Tesla that expire next week. So Looking for a move back above the 21 EMA here. Should we get back above the 21, we'll take home profits on the current positions that expire next week, and probably patiently look for something, for January expiration. And last but not least here, the semiconductors just look really freaking good. So it could be Nvidia. That looks great. AMD looks great. So we picked up some AMD here today for January expiration. I'm pretty much thinking everything, holds up here. You look for leadership first in QQQ and the semis into, the end of this month, into January. But that's what we're rocking with here today, guys. The bulls take the lead today. To keep it, we got to finish a week above the 21 EMA. So that's what I got for you for now. Talk to you in the next one.